Good morning, everyone. It's a pleasure to be here, and thank you for the time this morning in this really great conference that is being organized by the Ministry of Economy and Investopia. A pleasure, again, to be here with the esteemed panelists that I have with me today. We are certainly seeing a lot of volatility and uncertainty in the world that we live in today. We've seen over 75 countries change leadership over the past year, and we're seeing a lot of changes that come with that in terms of either strategy or policy or risk-taking or influence and alliances that get formed as a result of that. And none has been more consequential than the recent elections in the United States with President Trump coming back for his second term. And the speed of which he's been issuing executive orders are faster than any of us can actually follow. And as a result of that, there's been a lot of changes that are taking place, threats of tariffs, taxes, alliances changing, wars that have actually continued for a little while, others that have stopped, cold wars that are developing, and friction that's happening within the overall world order and world system. And as a result of that, we're seeing a lot of tailwinds and headwinds. Different countries are positioned differently to take advantage of what's been taking place. And therefore, the topic of discussion today, new capital, navigating trends, flows, and opportunities, has never been more topical than we are seeing in the current environment that we are in. And again, I'm very pleased to have the panelists with me that I have, and in particular, given their broad sets of experience and expertise, it'll be interesting to get their perspectives on this. Alex, if I can start with you. It's fair to say that in 2025, in a lot of respects, the prevailing world order is being challenged. You have a very specifically broad geographic remit which you cover at Deutsche Bank. And I would love to get your perspectives on specifically the new trade order that we're seeing in the world today. What do you think is evolving, and how do you see that being consequential in the world that we live in?
So I think the buzzword of the year, maybe the decade, is probably multipolarization and fragmentation of trade, and that is certainly true. By the way, that's not to be misunderstood as a deglobalization or anything like that, but this fragmentation has started, and it's intensifying, in particular by the orders that you mentioned coming from Washington every other hour. Why is it happening? I think the two key drivers, right? One is growth divergences. When you look at the 10 largest or fastest growing trade corridors in the world, only one of them has a US nexus. For the next couple of years, 5 of them have a China nexus. By the way, the largest growing trade corridor for the next 5 years is going to be between Middle East and South Asia. So you're all very well positioned in this regard. But that certainly also explains why, call it fragmentation or changes are taking place in terms of where trade will become more relevant down the road. The other aspect next to the intrinsic growth, and obviously it's intertwined, is the political aspect, right? The largest economy of the world right now is essentially telling us it doesn't want to engage on trade. Yeah. It does like business, very much so. It does like financial investment. But as the largest consumer in the world, it wants to consume products that are produced in its own country rather than being subjected to trade. That's essentially the message you're being given with the tariff environment that is being created. And this political aspect, by the way, is not new. It has not started on the 20th of January. It has evolved over time. The US in the last 8 years has not signed a single trade agreement with anyone in the world. In the same time, China has signed 8, the EU has signed 9. So there is a trend, and that will continue, and all of that, again, will lead to further fragmentation and diversification of trade channels.
Thank you, Alex. With everything that you're saying and the whole trade impacts with the flows as you've discussed it, I'd like to turn over to David. You also have quite a large remit that you have at Citibank. How does what we just heard translate into capital flows? What are you seeing in terms of capital flows, and what are the kind of pitfalls or opportunities as a result?
So I agree with Alex in terms of the sort of the fragmentation, but it doesn't necessarily mean a reduction in velocity. And I suppose, as you say, we have a very significant network. We're moving about sort of $4 trillion a day through that network on behalf of our clients. And based on the data that we see, yes, there's a changing flows, changing corridors, but there's also the capital that is there to facilitate that trade. To give an example, when Samsung announced a $40 billion fab in Texas, alongside portfolio capital, strategic capital like that is continuing to move, and some of it in response to the trade environment, but some of it is also just for the economic opportunity that our network of clients see around the world. So I think capital flows, and to Alex's point, didn't just start. Take the US as an example. I mean, the growth of FDI into the US over the last 5 years has been the biggest growth in the world. And why is that? It's because of the economic background. It is because of the nature of the market, the biggest consuming market in the world. And while current trade settings might encourage more manufacturing to be conducted in the United States rather than imported, the other element that's really significant is energy. And the relatively cheap energy in the US and the abundance of energy and energy independence being back on the agenda means that differential attraction of capital that will source that energy, particularly from Europe, we think will continue.
Yeah, it's interesting because also part of what has attracted the FDIs into the US is the IRA, which also is being challenged by President Trump today. So it'll be interesting to see what the consequences of that could be in the longer run. I don't know if you have any thoughts about that.
My guess is that energy cheapness will outdo subsidy via IRA.
David, while I still have you, I'd love to maybe shift in terms of focusing a little bit on Europe. Now, we all look at Europe and think that there's a lot of truly headwinds there. When you see where the economies are going, the lack of growth, sort of systemic risk that exists, not just in Europe, but also in the UK. I'd love to get your perspectives on what you're seeing there. Are we overly concerned? Is it right for us to have that perspective?
I'm glad you've asked the Australian next to a German and a Frenchman on the panel to answer this. I think the challenge, and His Excellency Minister for the Economy Al Murray said it this morning, he used the word risk and reward. And in the UK and in Europe, I think one of the challenges is that dynamic between risk and reward is out of kilter. And there isn't necessarily the regulatory or the political support for business and innovation that there should be. And that's not just recent, that's over the longer term. And is this a very significant contrast to the United States, but also here in the UAE. And we heard His Excellency Minister Al-Suwaidi go through that in terms of the investment climate here in the UAE. And that's the bit which I think has people concerned about the economic future of the UK and Europe. And I come back to the theme of energy. At 3x the gas price in Europe, it's incredibly hard to compete with the rest of the world.
Yeah. Thank you for that. Alex, if I may, just again, going back to your where you sit in all of this, where do you think the world is in the middle of all of this disruptive elements that play currently? Are certain geographies better placed than others to take advantage of what's happening? How dramatically has the risk landscape changed? Do you see where should business leaders be focusing their risks and opportunities in the context of everything that we're seeing?
So I would think that, there's many factors, obviously. The single biggest one is probably geopolitics at the moment. And if you cluster the world, then I find that the different parts are differently prepared to accommodate that. Yeah? And let me start with China, and this is probably a bit of an unusual comment I'm going to make here. Clearly, China in the US-China dynamics that will prevail for the next decade plus, is probably better prepared or has anticipated a lot of that. To come back to trade flows one more time, in the first Trump administration, 80% of China's trade surplus was with the US. Yeah? It was consequently very exposed to tariffs. This 80% has moved to 30% in the meantime. So there has been a proactive stance. Now, the trade has not disappeared per se. It has moved to what we call the connector economies, primary products moving to Vietnam, moving to Mexico and the like. So more and more jurisdictions are now subjected to the tariffs evolution. My point is that China is acutely aware of this and also sees the administration as, a party that is looking for an economic advantage, and it's one that you can deal and negotiate and trade with. Other parts of the world are better trained with respect to the muscle of dealing with geopolitics. I mean, whom do I speak to in this part of the world that we're in right now? It's one of the most complex parts of the world in terms of geopolitics, and consequently this DNA has evolved over time. The weakest part of the world, in my view, and I can say this as a European, is probably Europe. I think Europeans struggle the most with the rise of geopolitical tension because our generation, since the end of the Cold War, has not seen geopolitical friction. We in Germany and in Europe as a whole, up until lately, thought that war in Europe would never happen again. We would have cheap energy from the friends in Russia, deep access to China in unrestricted ways as a market, and the friendship and the safety with the US. And in the space of a few years, we've seen those pillars kind of evaporating or becoming very weak. So we really need to, Europe really does need to step up and deal with the multitude of geopolitical aspects way, way better. We'll get there, but we're not as trained in terms of this muscle.
Martin, if I can turn over to you, in light of all of this that we're hearing around the world, all of this volatility, all of these sort of pull factors, et cetera, as our only local participant, if you will, in this esteemed panel, and in your role within FAB, the largest bank in the country, what are you seeing in terms of flows? What are you seeing in terms of opportunities? What are you looking at in terms of economic shifts and strategies driving growth, particularly in the UAE?
Thank you, May. Delighted to be here today. Maybe if I can come back on a couple of points mentioned by Alex and David. Yes, the international trade is still growing and still going strongly, by about 5 to 7%. But it has changed. The usual trade and investment corridors, which were dominating the planet for the last 50 years, have changed. And we see a significant shift, and a shift which is very favorable to our region. And I just hear Alex saying the Middle East is one of the most complex part of the world from a geopolitical perspective. Yes, it is true when you look at the Middle East from Asia, from Europe, from the US, where there is sometimes a perception which is dominated by what we see in the Levant region. But the reality of the Middle East is very different, And when you look at the Middle East from Abu Dhabi, from Dubai, from Doha, from Riyadh, you see a vibrant region growing very strongly, supported by innovation and with very open economies. And coming back to the point of trade, the UAE is today one of the most open economies globally, with a number of free trade agreements which have been signed by the current administration with many, many more countries. So the UAE have been an agent of change and promotion of world trade in a way which has very significantly benefited the country and the economy. How does it happen? In which context? I think it's very important to understand that we see a major shift, and this is not the first time, by the way, in the world trade and investment flows. If you look at it, stepping back a little bit, 50 years ago, the center of gravity of the world economy was the Atlantic Ocean. And it was a trade and investment corridor between Western Europe and US East Coast. And then there was a shift to Pacific and trade between US West Coast, and China. And what we are seeing today, I believe this is a long-term trend, is a shift where the Indian Ocean becomes far, far more important, and the countries on the shores of the Indian Ocean become far more important. And why is that? Because we see a very strong demographic growth still happening in this region. You have 1.4 billion people in India, you have 1.4 people living in Africa, and Africa will probably reach 2 billion people in the next 25, 30 years. So you will have about 50%, 60% of the world population living on the shores of the Indian Ocean. And just in the middle, you have the UAE and the Middle East. So the UAE ideally positioned, to become one of the new global hubs, of the world economy. So a shift of gravity center very much in favor of our region.
If I can just take that point and maybe elaborate a little bit more. If you look at historically, how has the UAE or GCC been regarded? Simply as a fossil fuel extraction hub. That's what we were known for historically, and a source of money to be extracted and invested externally. Now, the world is evolving. We're in the middle of the biggest AI revolution that we have seen. We're seeing a lot of shifts in use of energy, or energy coming from fossil fuels to renewables, and focusing on all of that aspect of it. With all of that said, do you see the region, the GCC specifically, or UAE in particular, being a net loser or a net winner in this? And if it's a net winner, how so?
So there is no doubt in my mind that we are seeing and we are witnessing, one of the most profound and significant economic transformation in the Middle East. This transformation is about moving from an economy which was dominated by fossil fuel, oil and gas, conventional energy, to an economy which is far more diversified today. And if you look at the UAE, already the majority by far, about 70-75% of the GDP, is non-oil and gas related already. So the diversification which has been achieved, in the UAE is already very impressive. The same in Saudi, where about 50% of the GDP, a little bit more, now is non-oil and gas related. And this diversification has happened, in many areas. This is tourism, this is logistics, this is transportation, this is retail, tourism, hospitality, etc., etc. But what we are seeing happening now is even more profound. It is about shifting from gradually managing the transition from conventional energies to what you refer to, renewable energies. And here again, the region is blessed with two things: sun and space. And that does allow to develop renewable energy facilities at a scale which is unknown in many other countries. And why is it so important? Because you see also the technology transformation and even revolution of AI that the country has embraced in a fantastic manner, with a number of initiatives which are aimed at positioning the country as one of the global champions. And AI means data servers, and it means a need for a lot of energy, and that will be more and more renewable energy.
I mean, I think the other interesting thing that, equal to what we heard, as you were saying, and what we heard earlier this morning from the Minister of Investments, is also how much the governments and the sovereign wealth funds are leaning in to making sure that that transition happens in a way that is making it as a sector economically viable. Because in the initial phases of it, where government leans in more and invests more and takes on the leadership role in that, it opens up the pathway for a lot of foreign investments to come in and then capitalize on that towards the next step. And I think that's been quite a unique proposition that we're seeing, particularly in this part of the world relative to other areas. We're running a little bit out of time, but I wanted to leave with perhaps one question for each one of you, which is, we're seeing so many different changes and movements happening in the world. We've heard a lot from each one of you in terms of what that impacts in terms of trade flows, capital flows, or just the sort of regional influences off of that. If you were to advise the audience, investors in the audience, where they should focus their strategies in light of the world that we live in today, in light of the volatility that we're seeing, what would you advise them to do? If I can start with you and then move backwards into Martin.
Maybe, May, if I could have sort of two answers to that. One is watch the theme of consolidation of capital. And by that I mean if you look at, and we talked this morning about the capital inflows and outflows from the UAE and the great job now that is, and the relationships that have been built by the likes of Mubadala and so on with the big asset managers in the world, that whole convergence of capital, of sovereign wealth funds, of asset managers, traditional asset managers, of hedge funds and so on, and how that is framing the investment philosophies, which are much more diverse, much more looking into particularly alternative assets and so on. So that's something to watch. So if you're investing capital, watch where other capital is going. But the second thing is, and picking up a little bit on what Martin said, and this is very relevant here in the UAE, energy, land, water, chips, and follow those because they are going to be the critical inputs to the next phase of economic vibrancy and therefore where investment returns are going to be available. I would add demographics, but those four inputs I think are very important.
Thank you. Alex?
Well, all of the above. I couldn't agree more. And maybe to add, keep going what you're doing here. I think and I like Martin's description also in terms of just looking at the map, right? The UAE is exactly in the right spot in terms of the center of gravity, in terms of trade, in terms of financial activity overall, moving more and more here. The region and the UAE is not just going to be seen as a big capital exporter. It's going to be much more than that as you're diversifying your business case further. So things are coming your way, and don't underestimate the one thing, the reliability and predictability, right? The consistency that the UAE has had is a big benefit that will also work in your favor. Again, we talked so much about frictions, geopolitics, and the like. You know, whether you are an entrepreneur or whether you're a financial investor from wherever in the world, this type of predictability really does matter, and consequently we'll see more attraction to this part of the world.
Thank you, Alex. Martin?
I think the answer is easy for me. The place to be is the UAE, definitely. And by the way, this transformation that we were mentioning is happening when we look at capital flows. The region was an exporter of capital and has become more and more an importer of capital. An importer of capital in technology. We have seen a very big investment by Microsoft. It was announced publicly a few months ago, very, very big. We see a lot of investment from infrastructure funds, private equity funds relocating to the region. Abu Dhabi, ADGM in particular, the IFC as well, obviously in Dubai, and looking for co-investment opportunities within the region, in infrastructure within the region. It can be IT and technology, as we have said. It can be also infrastructure. So plenty of opportunities really for foreign capital to invest in the region.
Thank you. As we've heard from our panelists, with every challenge that exists somewhere, there's always going to be a bright star of opportunity in a certain part of the world, and we're lucky enough to be sitting right in the epicenter of where opportunities lie from here, and looking forward as well. Thank you very much, each one of you, David, Alex, and Martin, for the session today, and thank you all for your listening. Thank you.